Hello and welcome back to focusIR. I am John Human and I'm very pleased to be joined once again by Jacques Vaillancourt, President and CEO of Mineral and Financial Investments. How are you doing, Jacques?
I'm well, John. How are you?
Very well, thank you. Very well. Today we're going to talk precious metals, both gold and silver. I've got a gold price in front of me, and it is going gangbusters. What's going on, Jack, with gold? What's behind this incredibly strong performance, and what does that mean for the returns on the portfolio of late?
Well, it's good. I should probably start by stating how we consciously were overweighted gold, and we made that decision a while ago. And as of our year end, or not our period end, the last one we reported, March 31st, we were 64% precious metals of our portfolio, which is a significant overweighting, considering that we have latitude to invest in all sorts of commodities and securities. And so we made a very clear call. And our view on gold has been pretty clear, is that we've been concerned about the confidence that the market has had about the U.S. dollar and the U.S. economy. And I'm not going to bang on about all the issues that have been discussed by the media, but to us, the most important issue is that the amount of debt in the United States, which is perceived and had been acknowledged to be the world's sort of reserve currency, everyone talks about the government, the federal level of debt, which is about $37 trillion. And that's a very big number. And that's about, it's about $300 per man, woman, and child. I think that's what it works out to. No, I'm sorry, $300 per taxpayer. But so it's quite manageable. But if you look at it on the basis of taking a look at all the debt, because there's Social Security debt, there's Medicare debt, there's unfunded liabilities, which notably are pension plan liabilities for most companies. And that's humongous. It's $226 trillion. Personal debt's $25 trillion. It goes on and on. And so there's about $366 trillion of debt. And that's about forgive me, when I said 324, it's really 325,000, the U.S. debt. But the overall debt per taxpayer is $3.3 million per taxpayer. It's huge. And so, and you can start seeing that in the rate, the bond markets, where the U.S. Treasuries, 10-year Treasuries, have to pay a premium over most markets, but certainly over markets like Italy or Greece. They're paying about 90 basis points more for the same money. So the bond market is always the wisest of markets. It's not very dramatic, but it sees through what Greenspan would call the excessive exuberance of the equity markets. And so we were consciously overweighted in gold. It's really paid off well for us. Our performance up to March 31st was strong. Year over year, we're up 31% for our NAV. There's no reason for us to believe that we won't continue to see good performance from our NAV. And our year end is June 30th. And so there's an auditing process that always takes a little while. So we should be reporting our year-end numbers, I would imagine, within the next 6 to 8 weeks. And so we were massively overweight gold, but in the past 12 months, it's up 46.6%. And so the logical question is, do we expect it to, over the next 6 months, to outperform by another 46.6%? And we don't. We think it'll continue to appreciate. There's no reason for me not. I sort of, in the back of my mind, believe that we will see $5,000 per ounce. But I do recognize there are other commodities that have lagged behind. And the one that we identified at the beginning of the year, around March, that we wanted to be overweighted was silver. Silver is, you and I talked offline, historically is about, the ratio of silver to gold has been about 60-1. And in March 2020, it peaked at 120-1. So you sold an ounce of gold and gold was about $1,500, but silver is about $12 an ounce. It was about 120, and so we're now about 82. But when we decided to overweight silver, it was still over 100 to 1. And so silver in the past 9 months is up 63%. So we'd invested in a series of silver companies. There are relatively few pure silver companies. It's the nature of silver is frequently it's a byproduct of gold and or in VMS deposits. So it's part of zinc, lead production. But we did invest in a couple of companies. One is Avino, and the returns from our Avino investment were very significant. We also bought about 30,000 ounces of silver, and we also have purchased into a company called Santa Cruz, which was a leveraged buyout from Glencore. The debt has essentially been paid back through all the profits in literally 6 months. It's been an outstanding performer, and it's run by some very competent guys. So we've increased our weighting in silver. We continue to be overweighted in gold, but less overweighted. And we've been deploying capital elsewhere. We think copper's undervalued. We think lithium's been undervalued. And so we've increased our weightings in a variety of companies. AIC Mines in Australia, TAC, Capstone, Hudbay, even the mighty Rio Tinto. We've added a position to that. Granted, it's iron ore and copper, but we thought it was undervalued. So we continue to think we'll continue to do well in this environment. Our financial performance has been good. Our balance sheet is clean. We have no debt. Our working capital is $13.8 million. And over the next 12 months, I expect to see gold perform well, but I think copper will perform better. I wouldn't be surprised to see $15,000 per pound or per ton of copper. So it's really just that the nature of what we do is we deploy capital in a very specialized area, and it's cyclical. So we have to move from where we think things are fairly valued to where we believe commodities are undervalued. And at the moment, we're favoring some other commodities other than gold. And we've taken some profits in several of our positions in the last few weeks. I say weeks, I mean the last 10 days.
So where have you been trimming the portfolio when it comes to gold? Is that the direct holdings or some of your stakes in miners themselves?
Investments in our tactical portfolio. Our strategic portfolio, our biggest single holding in gold is through Golden Sun. We hold shares in Golden Sun. Golden Sun is the largest mining company, but also it's not a big company, but in Costa Rica, it's the biggest mining company. And if you take our gold, our deferred gold contracts and our shareholdings, and our deferred gold contracts were allowed to convert into equity, we would own somewhere between 17 and 20% of the company, depending on circumstances over the next little while. By the way, we are moving forward on monetizing that asset. We've retained an investment banker. They've been out marketing. We're getting a lot of interest in Golden Sun. And there are several paths. We could either just put it in, sell it to a company for cash, or sell it to another company for shares. Also, a possibility is if a company wanted to inject $25 million into it, we could take it from 500 tons per day to potentially 1,500 tons per day, which would put it close to 80,000 ounces a year. So those are all possibilities. So it's not as if gold is not going to be part of our portfolio, but the days of it being 65% of our portfolio are probably behind us.
Yeah. To perhaps talk us through where you see the drivers of performance for the metals that you're shifting your weighting to. So silver, copper, both as you sort of allude to, cyclical, more industrial. Where do you see the drivers coming from?
But the drivers are Well, in the case of copper, it's it's always been the commodity that people like to talk about as a measure of global economic performance. And it's been everyone's favorite for the last 5 years. And now recently people aren't talking about copper. But the reality is there is very little, there are very few new copper mines coming on stream. Demand for copper remains constant. We think it's probably the best way to participate in the electrification of the economy. And we're favoring producers. We do have a couple of exploration plays, but we favor producers because they get the immediate performance out of when generalists start looking for plays in the space. They want names they recognize, and the names they'll recognize will be the capstones, the Tecs, and as you know, Teck is merging with Anglo, and some of the smaller mines. AIC, we started buying at 31 cents. It's now 39 cents. It's performed rather well in a very short amount of time. Bearing in mind, the price of copper hasn't moved that much. It's more a function of the tolling charges, the treatment charges. There is a shortage of feedstock for copper refineries, and the charges have come down significantly, and so the profitability of virtually all copper mines has improved without there being much of a change in the copper price.
And let's quickly talk about silver. Is it subject to the same sort of macro pressures that drive the gold price, or is there something a little bit more to what's going on?
Well, everything is denominated in U.S. dollars. The U.S. dollar is down a little bit. We think it'll go down further. That's our internal forecast. So that'll drive it. Two, the drivers for silver are less investment based, more industrially based, but more contemporary industries. It's used for solar power generation. The panels, they use silver. Silver is a great conductor, so it's used in mobile phones and television sets and laptops. And it's a natural antibacterial, so it's also being used increasingly for surgical purposes in the hospitals. So the drivers are a little different, but they have their own growth engines that are less subject to economic cycles than a copper might. But even copper, I think the demand for copper will be positive even in a slowing global economy with this want of electrification. So as I said, the price of copper is about $9,800 a ton. I wouldn't be surprised to see it at $15,000 a ton in 12 to 18 months.
Still plenty of opportunity out there in the commodities complex, and good to see you're on your toes, being nimble in accessing where the best returns are likely to come from. Jacques, always a pleasure talking to you. Thank you very much.